Paul Cavey, thanks very much indeed for joining us.
Give the government some confidence. Think about the economy more broadly going well for China. And the more interesting story is you look at TSMC.
Hello, welcome to the East Asia Econ YouTube channel. My name is Paul Cavey. I'm the founder of East Asia Econ. Today, I'm going to talk about the impact of the Iran war on economies and the markets of East Asia. Obviously, this is a very fast-moving situation, so there's a lot of things to consider. And obviously, right now, there's still a lot of uncertainty about how the war is going to end up, whether the ceasefire holds, and so on. But I'm going to talk about some things about what we can say about the impact on the economies, and then also what the market implications might be for you as investors. Now, before I start that, I was going to try and ask you for three things for people watching this video. The first is, if you find this video interesting and you like it, please subscribe to this channel and also tell your friends and, in fact, even your enemies if you find it useful, because it would be very helpful to me if more people see this information. The second thing is subscribe and look at our website, eastasiaecon.com. On that, there's a broad range of information about the economies of China, Japan, Korea, and Taiwan. We have a huge amount of data that's available now in an API. There's also a lot of charts where you can look at what's happened with most recently issued data. In addition to that, there's some visualizations and also some analysis of what's going on. So that's the second thing. If you're interested, please check out our website, eastasiaecon.com. The third thing, if you're a professional investor, then please think about subscribing to our more in-depth service, where we produce a lot of analysis on what's happening with the cycles in Asia and also the structure of the economies, what the market implications of all those things might be. We have a lot of analysis that is produced each day, and also do conference calls and other things to give you the information about what's going on. So again, please check out the website or get in touch with me if you need more details about that. So that's kind of all by way of introduction. Now, the next thing I wanted to do is get into the meat of the topic today. So the Iran crisis, what it means for the economies of Asia. So I was going to talk about it in like 4 or 5 parts. So the first thing to talk about is sort of why it is important for Asia that this thing happens. Obviously, it's quite far away, and Asia isn't directly involved in the sense that there's any military involvement from the region in what's happening. But clearly, it does matter a lot for the region. And there's, we can look at that in different ways. So the first thing, as this chart shows, looking at the dependency of energy in energy imports of Asia. Obviously, with the exception of China, and it's important there is an exception in China, but for the rest of the region, for Japan, Korea, and Taiwan, they're heavily dependent on imports of energy from the rest of the world. The reasons for that are obvious, right? These are economies which don't have resources themselves. They particularly don't have any oil. They don't have much coal. So they're obviously very dependent on imports of energy from the rest of the world. And so that's the first point. The second thing is in terms of the impact of specifically what's happening with Iran and the closure of the Strait of Hormuz. Why does that matter for Asia? Because they get a lot of their energy from Saudi Arabia and from Qatar, and also some of them from Iran. And if you think about somewhere like Taiwan, as this chart shows, where we look at the imports of LNG and where those imports come from, obviously for Taiwan, getting imports, Qatar has been the biggest supplier, the biggest single supplier of energy to Taiwan over the course of the last couple of years or so. And so the fact that there's been so much disruption to LNG supply from the Middle East to the rest of the world is a big deal for the economies of East Asia. So that's the second point. The third thing is, again, just thinking about China. I said in the first chart, it was a bit different because China isn't so dependent on the rest of the world for energy. Obviously, one reason for that is because China has a lot of coal, which isn't true for the rest of the economies. And the other thing is what we've seen in recent years is this electrification trend in China, and particularly the increased use of renewables. Now, hopefully for the rest of the region, this will be a bit of a wake-up call. Living here in Taiwan, where it's basically windy, rainy, or hot most of the time, it's sort of remarkable that renewables here are such a small proportion of the energy mix. China, in that sense, has moved a great deal forward. And I think as a result of that, actually, and then, if you've watched a few of these videos, you'll see that China often, and a lot of the things we talk about, there's some similarities with what's happening in the rest of the region, but it does tend to be in a bit of a world of its own. And I think in this case, in terms of the energy shock, it's also true. And so China in this, I think, is a relative winner. the other three economies are much more exposed to what's happening with the Middle East. So that's the first thing, just setting out the stage of how dependent these economies are on energy. So that's the situation. All these economies being quite dependent on energy imports from abroad. Now, why does this matter, and what could be the potential economic impact of this? And there's three different channels that we could think about. So the first one is the impact on inflation. Now that, in fact, is already being seen. And for example, today so we're talking on Friday the 8th, I think we are, and we've just had PPI inflation data for China today, and it's showing that PPI is rising in China for the first time since 2022. One of the reasons for that is the increase in oil prices and energy prices that's beginning to feed through from the Middle East. So there clearly is going to be an inflationary impact from that. We can see that in the hard data, as this chart shows, looking at the PPI numbers from China, but we can also see it in some of the soft data. So looking at some of the business sentiment surveys that have come out and what companies say about where they think prices are going, they all show that prices and input prices are going to be rising quite a lot. So that's obviously the most obvious thing. That's already been seen in the data. This is a real effect, and so it's very likely that inflation in the region is higher, at least over the course of the next 6 months, than it would have been without this Iran war. The second thing, what's the impact on growth? Now, that still is not in any of the hard data, in the sense that we can't see GDP growth slowing down. We haven't got numbers that show IP, industrial production, has been affected, and so on. However, there are signs that it is appearing in terms of consumer sentiment in particular. And again, this week, Japan released consumer confidence numbers for March. It's the biggest fall in consumer confidence, except for the falls that were seen at the height of the COVID crisis back in early 2020. So that's a bigger shock to the consumer and a bigger shock, therefore, to the economies than it was, for example, the tariff shock that Japan saw last year, where the BOJ did downgrade GDP forecasts and so on. So this is something which is quite significant for economies already in terms of the impact on sentiment that's been seeing. Now, right now, there could be a difference that we see these sentiment numbers falling and we don't see the economies actually deteriorating further from here. And really, that's going to depend on what happens with the course of the war from now. And this is why I think, particularly the timing of the ceasefire is so important. If it does hold, that becomes very important. These sentiment numbers are probably going to start to improve again. And we can see it in terms of, what's happening with stock markets, that they don't look nearly so depressed as perhaps the sentiment numbers are. And that, I think, reflects this confidence that actually things will eventually normalize. The impact on growth isn't going to be so big. These declines in sentiment are not something that we should pay so much attention to. However, if the ceasefire doesn't hold, then the economic implications of this become much bigger. Again, we're already seeing the warning signs of that through these declines in sentiment in terms of domestic sentiment in the economies. But the other thing to be looking for is, what's the impact of this on the world economy? Is there going to be a downturn in growth globally? And obviously that matters a great deal for Asia, because all of these economies, and this statement includes China, are very dependent on exports to the rest of the world. So if growth is going to decline in the rest of the world because of the oil crisis, this is going to be a big deal for growth in Asia. And it's very easy to see that if there is a big export downturn, all of these economies growth will be slowing sharply, and it's likely there'll be recessions. So how long this crisis lasts, whether the oil price does now start to decline because of these hopes about the ceasefire, all of that is very critical in thinking about what happens with the economies. The third thing to be bearing in mind about the impact of the oil crisis and the Iran war on the region is this chart. And this is something we've talked about before in a lot of these videos. So this chart is looking at the prices of semiconductors and exports of semiconductors from the region. Why does this matter? Because this, I think, is, if you're watching this video and there's one thing in particular you want to get a sense of what's happening with the Asian economies, what is the impact of the Iran crisis, if it's something that is really moving from just an impact on sentiment to an impact on the real economies, it's really whether the AI semiconductor cycle breaks. Now, why does that matter? Because if we think about somewhere like Korea, exports in Korea are up 50% year on year in March, like a very sharp acceleration in exports because semiconductor prices are so high. And obviously, Korea is one of the biggest semiconductor producers in the world. But even somewhere and obviously that's also true in Taiwan because of TSMC, where export growth has also been strong. But even in somewhere like Japan, In fact, over the course of the last couple of months, as much as energy prices, we should be somewhat concerned that energy prices rise further from here. But this time around, there is an offset to that increase in energy prices, unlike in 2022, because actually export prices have been going up at the same time. And obviously, from an economic point of view, one of the concepts that people think about is the terms of trade. So what's the difference between export prices and import prices? That's one of the things that determines purchasing powers of domestic economies. One of the reasons why energy shocks are negative for economies in Asia, because they import all of their energy, import prices go up. It means that consumers and households have less money to buy other things. If, however, export prices are rising at the same time, that negative energy shock is nowhere near as severe as it would be otherwise. And so I think it's very important that there is this big AI semiconductor trend in place. And all of the economies that we're focusing on here, Taiwan, Korea, and Japan, they all play big roles in the global semiconductor supply chain. And so this is a thing to be focusing on. Obviously, the impact on prices, the impact on growth through sentiment, but the biggie really for the region is whether the semiconductor demand cycle now begins to fade sharply. If that happens, that really opens up a whole new world in terms of thinking about these economies. If it doesn't, and the semiconductor cycle holds up, actually, as I'll talk about, I think there's more reasons to be optimistic, in particular around things like currencies in the region. So that's the second thing, like thinking about what the potential impacts of the oil crisis will be on the region. The third section to be focusing on is then what can governments do about this? And again, here we can talk about three different things, I think. So the first is, and we've seen this already, is price controls. And so, anybody familiar with the region will know what happened in 2022. Energy prices rose again because, again, as much as Asia wasn't as exposed as Europe to the impact of the war in Ukraine and the energy supply changes that happened out of Russia, as much as that was true, energy prices globally still went up. Asia's a big importer. Now, what did the governments do? They tried to prevent, at least to begin with, the full effect of those price changes being felt by consumers. And once again, we're seeing that happen. And so what we've seen is in Korea, the government has imposed a price cap on the price that refiners can charge to downstream consumers of petroleum. In Japan and Taiwan, it's a bit more transparent. So the government has both governments have subsidy systems. The numbers are pretty transparent, so we know roughly how much they're spending and how much they're holding down prices. But essentially, if you look at somewhere like Taiwan, like the government has a formula where oil prices feed through into the pump price that consumers face. The oil price at one point was up 60%. Petrol prices or gasoline prices are only up 10%. The difference between that is, one thing, it means that inflation is held down. But the second thing is it means there's a fiscal cost to the government. And when I looked at this data, a couple of weeks ago and thinking about what happened in 2022, a rough rule of thumb for thinking about the region, basically the governments can spend about 1 percentage point of GDP on fiscal help, and that reduces headline CPI inflation by about 1 percentage points. Or it's a bit rough, but along those lines. So that's what we've seen so far. The government's been opening up their fiscal checkbooks, essentially holding down prices. And so as much as some of the leading indicators for inflation are going up, the inflation that consumers are actually seeing hasn't increased nearly so much. And that's because of what they're going on with fiscal policy. Now, the next thing that can happen, obviously, is, again, let's think this through. If there is a much bigger growth shock from this energy crisis, then what happens? And then we move on from the situation where they're just subsidizing oil, holding down oil prices and so on, to when the governments really need to start to think about how they're going to help economies to grow once again. Now, again, I think right now we're still some way away from that. But when we do think about that, clearly there is room for the governments to do things. But when we think about the amount of fiscal room that governments have, as this chart shows, looking at the fiscal balance across different economies, it's clearest that Taiwan has a lot of room for maneuver. It has very little debt. The fiscal deficit is very low. Korea has a bit more room in the sense that public debt is quite low. But obviously the one that will be in focus if we get to this stage is what can Japan do? Because Japan, the fiscal, as much as, a few videos ago, I talked about like the fiscal policies of the new Takaichi government, and it wasn't nearly as scary as the market was thinking. But if you get to a situation where the economy is slowing down sharply, the government will be under a huge amount of pressure to spend a bit more money. And then the market will be all over what the fiscal implications with Japan will be. So we'll move from where we're at this stage, where the focus is very much on inflation and holding down prices, to the next stage could be that the governments have to start to think about what to do about growth. Now, the third thing in terms of policy, what governments can do about policy, is what the central banks do with interest rates. And that's probably most directly interesting for the markets at the moment, for investors of thinking about what this means for monetary policy. Now, my kind of sense on this is I think right now it does look like it's much more likely to be an inflationary shock that pushes up prices. At the moment, it doesn't look like the negative impact on growth is going to be so severe. Now, again, that can change. But right now, if we have a ceasefire, then that's probably going to be the implication. The reason I say that is not just because the growth implications haven't been so obvious yet. It's also because of the context in which this energy price shock is happening. And that context can be illustrated, for example, in somewhere like Japan. And this, as this chart shows, this looks at wage growth in Japan over the course of the last few years. Now, if you think about where we were in 2022 with the last energy price shock in Ukraine, at that time, wage growth in Japan was basically only a little above 0%. It really hadn't seen an acceleration in wage growth. If we look at it today, and the data this week from Japan for wage growth in February was actually quite strong. Right now, wage growth is about 3% or thereabouts. It's very different. And we've been in a situation now where inflation in Japan in particular has been accelerating over the course of the last 2 to 3 years and remains very high. So the context for this happening, for this latest increase in oil prices, is quite different from before. So the context for this happening is very different from the context or the situation back with the Ukraine war. That's true for Japan. It's also true for Taiwan. Again, it's not quite as different in terms of the acceleration in wage growth, but wage growth in Taiwan has also been accelerating over the course of the last couple of years or so. It looks like core inflation, which was basically in zero in Taiwan before 2020, is now bottoming out about between 1.5% or 2%. So the fact that there is now a new inflation shock when underlying inflation trends remain quite strong, that's going to be very important for central banks. The third one, Korea, if we think about that, and we have another video looking at what's happening in Korea. But in Korea as well, it looks like inflation also is at least higher than the spare capacity in the economy would usually suggest. So there's a bit more inflationary risk in Korea. And the way to think about that is that growth has slowed down a lot. Ever since 2022, growth has been below potential in Korea, and yet inflation remains at 2%. It's only slowed to target. It hasn't slowed below target. And so for all these economies, I think the question is really, there's a likelihood that the central banks are going to be hiking interest rates as a result of this inflationary shock, to the extent that the inflationary shock doesn't show up in a big slowdown in the AI cycle. That's really the trade-off to be thinking about. The one remaining one is China. And again, it's in a bit of a world of its own. I've talked about how inflation, the data is showing that inflation has now gone up in China, that for the first time since 2022, PPI inflation is rising. That's a positive, I think, for China at the moment. But it's very unlikely the central bank needs to do anything about that in terms of inflation, in terms of interest rates, because China has been in a deflationary situation for the course of the last 2 years. So we've talked about what's happening, like the impact of the oil dependency that Asia has, what the feed-through of that into domestic economies might be, and also what the policy implications and the policy choices that governments might have. Now, the final thing then is to think about markets and think about what all of this means for, we've seen some of this happening already in terms of currencies, equities, and also in terms of what's happening with the bond market. Now, the biggest impact, I guess, so far has been in terms of currencies, and particularly when the Korean won, the Japanese yen, both sold off quite sharply, particularly the won after the Iran war broke out. Now, that's particularly important for me because if you go back and look at this channel, I had a video just a couple of weeks ago saying, well, before the war, that actually, we were in a situation where Asian currencies were very weak, and it was likely this year that Asian currencies should appreciate. Instead, what we've seen is the initial reaction to the war is these currencies really, really selling off. And, again, in particular in Korea, the currency has been extremely weak. So that's one thing to be noticing. The other thing in terms of the bond market in somewhere like Japan, again, because inflation is quite high, oil prices are coming through, interest rates go up further. Now, I think what can we do with this information? Now, I mean, again, I'll talk about Korea in a different video in a bit more depth, but it does seem to me still that the Korean won is still is very cheap. And one reason for saying that again is, some of these issues I've talked about so far. On the one hand, there is this increase in energy prices happening. On the other hand, there is this very real, very substantial increase in semiconductor prices and semiconductor output. That's being reflected in this chart, which shows the current account surplus in Korea over the course of the last few months. And again, if we think about the context of Korea today with what happened back in 2022 with the Ukraine crisis, at that point, basically, Korea's current account surplus was near zero. Now it's up at around 10 to 15% of GDP. It's never been higher. So, like, Korea is certainly puzzling. It's puzzling to me, and I'm spending a lot of time thinking about it. But I do think that these fundamentals should matter. And assuming that the AI cycle doesn't really roll over in response to the Iran war, I think one of the consequences to be thinking about is that as much as the Korean won was cheap a month ago, it's even cheaper today, and actually it still looks very undervalued. So I think that's one thing to be focusing on. The second thing more generally is just in terms of interest rates and what happens with interest rates from here. And, interest rates, particularly in Japan, have been going up. But I do think there is a likely response to this, that the central banks are going to be increasing interest rates, again, with the proviso of what we see happening with growth. But right now, given that the context for the increase in the oil price recently has been economies which look quite strong, where manufacturing cycles have been picking up, and where inflation pressure remains quite pronounced, I think in that there is still going to be a lot of pressure for the central banks to be raising rates. Now, ultimately, that I think is something that helps currencies, even though it hasn't been seen yet. And so I suppose the next things to be watching for here are, first of all, whether there is going to be a ceasefire. The second thing, whether the AI cycle really begins to roll over. The third thing, if the AI cycles don't roll over, I think we should start to see markets becoming much more confident that because growth is holding up, then central banks are going to be more hawkish because actually cycles are quite strong and inflation will be rising. And I think that's probably the big takeaway from what we've learned about the Iran war so far. Now, again, as I said, I'm Paul Cavey, the founder of East Asia Econ. All of this analysis is based on the stuff I'm doing like day by day, the charts I'm building, the data infrastructure that we have, and the analysis I'm trying to do. You have more interest in that, then please get in touch directly and do go look at the website to get a bit more information about exactly what we do. Thanks very much for watching this video.